Hi everyone, my name is Mason Borlik, and today I'm going to be discussing the scandal involving TYCO and many of its executives that came to light in 2002. Our main character and anti-hero in this story is named Dennis Kozlowski. There's no denying that Kozlowski was greedy beyond belief and used TYCO as his personal piggy bank, including for things such as a $6,000 shower curtain that we'll get into in a bit. However, unlike many of the stories you'll hear today, this scandal did not actually end up with TYCO declaring bankruptcy. While reading through many accounts of this story, it became evident that Kozlowski, greedy and unethical as he was, actually built a sound enough business that could withstand the financial tremors that he caused. A bit of a background on TYCO and Kozlowski. By 1986, TYCO was organized into four core segments: electrical and electronic components, healthcare and specialty products, fire and security services, and flow control. Kozlowski arrived at TYCO in 1975 and demonstrated himself as a high performer who rose through the ranks. He was adept and able to mold his personality to fit his various bosses. Once Kozlowski became CEO in 1992, he started to work to fill the C-suite and board of directors with people who were willing to compromise themselves or look the other way to fund his lavish lifestyle. During the 1990s and early 2000s, Kozlowski took the M&A activity to a whole new level. Some of the major acquisitions included ADT, Raychem, and the CIT Group. This rapid rate of activity saw Kozlowski's official compensation rate skyrocket, and by 2002, he was the second highest paid CEO in the world. The amount and frequent pace of these acquisitions provided more than enough cover for him and other executives to engage in questionable accounting methods. One of Kozlowski's favorite methods was called spring loading. As part of most of the acquisitions, Kozlowski and others would receive stock options from TYCO as an incentive. To ensure the stock price went up, Kozlowski and his team would artificially depress the market value of the target company during the quiet period before the M&A deal closed. These moves included understating earnings and cash flows. After the deal closed, these revenue streams would all of a sudden open back up, and TYCO investors saw the acquisition as an instant success. Kozlowski and others would immediately move to cash in their options and massively profit off the deal. If Kozlowski and his team had just stopped with questionable accounting practices, they may have never been caught. The fraudulent stock activity made up a bulk of the money that Kozlowski and others made. Some other more nefarious programs included things like corporate loans that gave executives no-interest loans for things like relocation. These loans were then forgiven by Kozlowski and TYCO, usually before any money was paid back. Kozlowski was also seen as a very generous person. He made numerous donations in the millions of dollar range. Most of these donations, however, didn't come from him, but rather from the TYCO coffers. This generosity afforded him increased social status and more cover for his outsized salary. We can also look at some of the other items from his spending spree, mostly from up and down the East Coast. The act that finally brought attention to Kozlowski was his attempt to evade about $1 million in taxes on $13 million in artwork that he bought with the company's money. This artwork was supposed to be displayed in the TYCO headquarters in New Hampshire, but Kozlowski instead had a manifest in empty boxes shipped to the office and had the artwork shipped to his New York apartment. This tax evasion charge was the straw that broke the camel's back, and during this time, numerous newspaper and SEC reports dug more and more into Kozlowski's elaborate spending at TYCO. Headlines that included the $6,000 shower curtain played very well in a time that included other scandals like Enron and WorldCom. After this scandal, TYCO was forced to revise numerous previous financial filings, and its stock suffered for years to come. But they were able to stay afloat with their diverse business and are still in business today as they try to restore a reputation for ethical conduct.